What's up, traders? It's Mark Sedlock. Today I've got a cool little video for you where we're going to cover market structure. I'm not going to go into the rules on market structure, but we're just going to talk about it at kind of a high level, higher highs and higher lows. But what we are going to go into detail on is trading out of market structure. So this video is going to go a little bit long, but I encourage you to take some notes. Look at the signal bars that we're going to go through, because this is going to give you details on how to trade out of market structure. But another thing that I'm going to go into today, and it's towards the end of the video, is a cool little secret that I just started noticing in my trading over this last week. Now, I don't know what the probabilities of it are yet because it's kind of new, but it's called an inside bar, which is so this bar right here. Sorry, I was actually going to circle the bar and that didn't work. But this bar right here is what I'm going to call an inside bar. So it's taking the rules for the signal bar that I'm using, and then if the very next bar is inside of it, I call it an inside bar. And if that happens from market structure, it's a very powerful signal. So I encourage you guys to watch the video and take some notes. So first and foremost, guys, let's talk about market structure. Market structure in its most simplistic form, okay? Now, this is kind of a perfect chart, right? Perfect uptrend. We're not going to see that very often, but a market structure really is just a thrust where we have a higher high. So this high is higher than the previous high, and then we have a retrace where the low is higher than the prior low, and then we go higher. Okay, and at this point we have created a pattern, and we would expect price to come back to that pattern. There should be a return, and we would expect price to move higher. So this personally is the type of system that fits my personality, and this is what I chose all my time studying. So I studied how do I define market structure in a very objective way, because there's too much room for subjectivity when it comes to market structure. And then how do I trade out of a zone to where I can get a very large potential reward and a very small amount of risk? Okay, because that's the key for the way that I trade. I want to risk just a little bit to try and make a lot. So the problem that I personally had with market structure when I first started studying it was, where do I define a zone? Here, because right here we have a small retrace, and then we go up. So is this a zone? Well, I will tell you that I think a lot of people would say, no, that's not a zone. Okay? And then, what about this guy right here? This little retrace. Is this a zone? So would I be looking for a trade out of here? Right? And then how am I going to trade out of all these zones? So these are the issues that I had when I started trading market structure. And for me personally, I had to be able to solve those, because I'm not good at being what you would call a discretionary trader. And so I actually had to code up market structure, which I'm going to show you in a minute. But I had to code it up so that I could remove all of that subjectivity. So, all right, let's go into the rules for the signal bars, and then I'm going to show you a lot of the other cool stuff. So I have what I call signal bars, and there are 4 bars that I typically look for. And we can just quickly go through and actually write rules down for them. So they're the same for bullish and bearish. They're just the opposite, okay? And I'll get into that. But the first one is a doji, and the rules for a doji are the open and close are the same. Actually, we'll just do this. Open equals close. All right. And then in addition to that, you have an upper. So the candle has an upper or lower shadow, or both. All right. Now, what is a shadow? A shadow is what you're gonna hear people call it the wick, but this is the shadow. All right, and so that's the first one. Okay, let's go on and do the next one. So the next one is going to be a hammer. So for the hammer, there's going to be no upper shadow, if I can spell, and the lower shadow is equal to or greater than the candle body. And so the body is going to be the difference between the open and close. So that distance has to be equal to or greater than the candle's body. I'm sorry, that is the candle's body. That distance has to be equal to or greater than the lower shadow. Okay, let's go on to the next one. Reverse hammer. It's just going to be the reverse of the hammer. So it's going to have no lower shadow, and the upper shadow is equal to or greater than the body. And then finally, a spinning top. Spinning top is it will have both an upper and a lower shadow. And at least one of them are equal to or greater than the candle body. It doesn't have to be both. It can be both, but it doesn't have to be both. Okay, so guys, what's really important in trading is that you define everything that you're doing, because you cannot leave any room for subjectivity. If you go to the internet and you do Google searches on these different candle types, you're going to have different definitions. I personally define them for my own trading. And so this is what they mean to me, and this is what works for me. So, okay, this is one way that I trade out of a market structure zone. And all I'm doing, let me find an example, and I'm going to show you exactly what I'm doing. So here's an example. So here is a market structure zone. It confirms as we move higher right here. We move back into the zone. It's hard to see this because I covered it up. But right here is a hammer. Let me blow it up. So here's a hammer candle where I have no upper shadow. I have a lower shadow that is equal to or greater than the candle body. So all I'm going to do, guys, is once price goes above this by a couple ticks, that's where I'm going to enter my trade. And then what I do from here is I take the ATR, and the reason I use the ATR is because it's a measure of volatility. So I take the ATR, and this determines my stops and my targets. So as volatility expands, I need to have a wider stop, which means I need to trade fewer contracts. As volatility contracts, I need a smaller stop, and I can trade more contracts. All right. So this gives you kind of a brief idea, a basic idea of the way that I engage in a trade. But now what I want to show you is, guys, I've coded all of this, okay? And the reason that I do this is because I don't, well, a couple of reasons. One, I do not want to have to analyze this on the fly. I want to be able to have all the analysis done for me, and then I want that analysis to be sent to me so that I don't miss trades. So I have this all set up on a scanner that can then just email stuff out to me so that I can engage trades. The other thing that's really important about this is once you have it into a software package, you can then start running tests on it. Okay? You can back test it to get an idea of what the system, how the system performs. But what's really cool about this is once you start backtesting, you start noticing different patterns, and you can test those. So one thing that I wanted to share with you guys is I was doing a backtest just this week, and I started noticing things inside of these zones that I haven't seen before. And let me see if I can find an example of it. But I'm gonna kind of outline the rules for you guys so that you can actually see this in action yourself. Give me 1 second here. Let me find an example. Okay, here's an example. So the one thing that I forgot to put on this chart is the trend. And the trend, there's no secret to this, guys. Let's see, market structure trend. All this is doing is it's measuring the market structure. So whatever the last zone to print is, it's going to remain that trend until that trend is broken and the opposite trend resumes or sets up. So let me show you an example. So let me see where it starts printing from green to red. So you can see here we're red. There's a market structure zone right here. It breaks and a green zone prints. So it goes from red to green, and then when the green zone prints, there's no red zone, so it goes to neutral until a red zone prints right here, and then it goes to red, and then it goes back to neutral because the most recent zone broke, and then we have a new one formed here, and it goes back to red. So a key here is you don't have to catch every trade. We just have to catch enough trades. So let me show you this. This is really cool, guys, and feel free to use this because it's actually a really cool entry technique. Let me find it. It's right here. Okay, so do you guys know what this bar was called? It's called the spinning top, right? I have a lower and upper shadow, and at least one of them, in this case it's both, are equal to or greater than the candle body. So I wait to have one of these signal bars, and then if the very next bar is inside, I'm going to call it an inside bar. Maybe you've heard that term before. But if it's completely inside of the signal bar, that's where I want to engage a trade. But it has to be from one of the zones. So the signal bar has to at least touch the zone. It doesn't have to be completely inside. It just has to touch it. So I just noticed we have one right here too. Okay, here's a signal bar. This bar is completely inside this bar. So I would look for a trade right here. Now, guys, this is a 240-minute chart. This is a 4-hour chart. So this is actually a pretty big trade if I were to go down to a smaller time frame. I could make some really nice money right here. It doesn't look big, but it's big enough for my purposes. Okay, then we come back into it. We have another signal bar, and then we have another move here. Okay, it doesn't take off immediately, but it's not enough to stop me out. And then you can see we have another signal bar here with an inside bar, and that's where we get a nice move. And then look at this one, guys. Here's another signal bar with an inside bar, and then look at the move. Okay, again, defining your market structure, defining your entry criteria allows you to test. Let me show you guys just a very, very quick example, okay, of what this can look like. Now, this is all computer generated. I didn't have to do any of this. But what this is doing is it's going through every single zone, and it's telling me the zone, and it's telling me the entry, the target, the stop, whether it was bullish or bearish. Bullish is 1, bearish is 0. It's giving me the date and the time of the zone so that I can go take a look and just verify that it's accurate. It's giving me the ATR, so I know where my stops and targets are. And then I have a handful of filters up here, guys. And these are filters that I'm using to analyze what criteria I should be using for trading. All right. And then what I'm doing is I'm just analyzing the filters to see what produces the best results. All right. So this is the profit if I just took every single trade, and then this is the profit if I start adding some filters. And what I want to do is I want to figure out how do I reduce my number of trades without compromising the system. And so you can see I have a couple different combinations over here that produce some pretty good results. Now this is so this would be $700 in profit, so 1,400 minus a 700, but it's a 2x profit factor, which means that I'm on average, when I win, I'm winning twice as much as my average loss. That's phenomenal, guys. So this gives my system a very nice expectancy and gives me confidence to be able to trade. So there's a couple of really small bugs that I'm working through, but this thing is almost ready. And then once it's ready, I've already downloaded 15 years worth of data that I'm going to crunch on Forex and on stocks, guys. So this is super exciting, and I cannot wait to have this piece done. But anyway, guys, that's all I got for you today. I just try not to make this video too long, but seriously, I challenge you, go to a chart and start looking for market structure, just regular market structure, higher highs and higher lows, and then look for these bars, the signal bars that we just outlined. Look for these inside bars. I think what you're going to see is you're going to see something really cool, and it's exciting, right? And so anyway, I don't have any data on these yet because it's something I literally just noticed, but it's something that I will code up and verify to make sure that it's as good as it looks. All right, gang, have a great rest of your weekend, and I will talk to you later.